We need to talk about AI stocks because right now there is a massive gap between what Wall Street believes and what companies are actually delivering. And that gap, it is starting to show some serious cracks. Today we are diving into what I'm calling the show me moment for AI stocks. The hype has been absolutely insane. Valuations have skyrocketed. But now investors are starting to ask a very uncomfortable question. Where is the actual money? Let's break down what is really happening behind the headlines. For the past 2 years, AI has been the hottest thing in tech. And I mean red hot. Companies have been racing to slap AI powered on everything. CEOs can't stop talking about their AI initiatives, and investors, they have been throwing money at anything with artificial intelligence in the pitch deck. We have seen stocks absolutely explode. nvidia's revenue jumped 114% in 2024 to 130 billion and became the first company to hit 5 trillion market cap. The stock gained over 170% in 2024 alone. Broadcom's AI revenue tripled to exceed 12 billion last year. Palantir's revenue grew 44% year over year. But here is the thing about hype cycles. Eventually, the market wants to see the results. Eventually, someone asks, okay, but what is the actual business model here? When does this turn into profit? And that moment, it is happening right now. Let me give you some context. Building AI isn't cheap. We are talking massive infrastructure cost, computing power that will make your electricity bill look like pocket change, and engineering talent that commands 7-figure salaries. But generating revenue from AI, that has been surprisingly tricky. Here is where it gets wild. OpenAI, the biggest name in generative AI, made around 4 billion in revenue in 2024. Sounds impressive, right? Except they lost 5 billion that same year. That is 9 billion in total cost just to operate. Their compute cost alone, that is just the cost to train and run the models, was over 5 billion, which completely eats up their entire revenue. And they are not alone. Anthropic, maker of Claude, reportedly lost 5.3 billion in 2024. Recent analysis shows that Perplexity spent 164% of its revenue on compute cost. There is even a company called Cursor that reportedly sent 100% of its revenue directly to Anthropic just for compute access. Goldman Sachs put out a report estimating that companies will spend about $1 trillion on AI infrastructure. To justify that spend, they would need to generate roughly 500 billion in additional revenue. We are nowhere close to that number. The gap between investment and return is real, and it is starting to make investors nervous. Here is where things get really interesting. We still don't have clarity on what the sustainable business models for AI actually look like. Is it subscription based? Is it pay per use? Is it licensing the technology? Is it embedded on existing products? Or all of the above? Different companies are trying different approaches, and honestly, nobody really knows which one will win yet. Look at the enterprise software market. A recent MIT study found that 95% of companies investing in AI initiatives see no return on their investment. Software company Notion reported that AI cost 10% of their profit margins just to offer features that everyone else is also offering. Some companies are essentially giving away AI features to maintain competitive parity. That is not a business model, that is a cost center. And then there is Microsoft. They are on track to hit a $10 billion annual revenue run rate from AI, which sounds amazing, but they have committed $13 billion to OpenAI. And Microsoft disclosed that losses from their OpenAI stake contributed towards $683 million of expenses in just one quarter. Azure is growing, but at what cost? The only companies that can afford to play this game are the giants with massive cash reserves. Meta is funding AI with social media profits. Microsoft, Google, Amazon are collectively spending over $320 billion on AI infrastructure in 2025. They can lose money on AI for years while smaller players burn through their runway. So we have arrived at the show me moment. Investors are shifting from this could be huge to show me the numbers. We are starting to see this play out in real time. Companies that miss revenue targets are getting hammered. Vague promises about AI transformation are not moving the needle anymore. The market wants concrete metrics: revenue growth, profit margins, customer adoption rates, and retention numbers. Look at the winners versus the losers. Nvidia is winning because they are actually selling physical products, chips, with real margins. Their 2024 revenue of $130 billion proves there is a demand. Broadcom's AI revenue tripling to over $12 billion shows the same thing. And then you have got companies burning cash at unsustainable rates. A report says 966 startups went out of business in 2024, which is up by 25% from the previous year. And these were not all no-name companies. These were well-funded AI startups that couldn't figure out the unit economics. This is actually healthy for the industry, by the way. It separates the real businesses from the hype machine. It forces companies to focus on actual value creation rather than just narrative. But it is also creating some painful moments. Stock prices are getting volatile. Some darlings of the AI boom are seeing significant corrections. And that is before we even get into a potential broader market pullback. The companies that survive this phase will be the ones with clear paths to profitability, defensible competitive advantages, and business models that actually work at scale. Or they'll be the ones with pockets deep enough to absorb years of losses. Basically, those are the big techs. Look, AI is still going to be massive. This technology will reshape entire industries. But we are moving from the speculation phase to the execution phase, and that is where things get real. The show me moment isn't the end of the AI investment thesis. It is the beginning of the part where we find out which companies actually build something sustainable. Some will rise to the challenge, others won't, and that is going to create both opportunities and risk for investors who are paying attention. So what do you think? Are you bullish or bearish on AI stocks right now? Drop your thoughts in the comments. And if you found this helpful, hit that like button and subscribe to my channel. See you in the next one.